Bitcoin versus gold part 1. Okay, this week I will introduce my two-part series on gold and Bitcoin. All the crypto players out there, I want you to know I am on your side. But what I am going to share this week and conclude with next week will shock the Bitcoin world by using advanced math to prove that the model that many of the talking heads and crypto gurus, many of which are close friends of mine, the model they are using is actually mathematically wrong. I'll get to that shortly, but first, let's cover where we've been. It was just a mere months ago that gold broke out to new all-time highs of $2,089. Though it's pulled back since then, gold has since settled in at levels not seen in a decade. But gold wasn't the only thing that set a new all-time high this year. Just earlier this week, Bitcoin managed the same, punching its way back to set a new record high of its own at $19,850. Just a hair shy of the much talked about $20,000 psychological mark. In fact, a chart of its recent performance that you're looking at right now looks strangely familiar. Simple coincidence? Of course. After all, these charts took place across different spans of time. But Bitcoin didn't pick up the nickname digital gold without a reason, and the two have a lot more in common than you might think. Cryptocurrencies, commodity or currency? How should we classify cryptocurrencies like Bitcoin? Are they commodities or currencies? Technically, they're both of the above, which makes them unique among most asset types. Case in point, Bitcoin functions as both a medium of exchange as well as a commodity with a theoretically finite supply. You could even call it a security in the loosest sense of the term. That said, there's one fundamental shortcoming of cryptocurrencies that doesn't apply to stocks, bonds, or government-issued currencies. In the unlikely scenario that the market for a particular cryptocurrency collapses, it will be worth exactly nothing, regardless of the cost, energy, equipment, and time to create the coin. At the end of the day, cryptocurrencies are a bunch of zeros and ones. Despite what the detractors of fiat currency say, every banknote and coin minted is backed by the full faith and credit of the issuing government. This may not mean much if the note is issued by the Reserve Bank of Zimbabwe or Zambia, but it will take a long time before the US Treasury will run out of things to tax. That's to say nothing of commodities like gold, where you actually own a physical asset, even if the intrinsic value of that asset is debatable. Beyond that, however, Bitcoin and gold serve very similar purposes. Gold can be used as a medium exchange, just like Bitcoin, unwildly as it is. There are services like Glint that allow you to buy and sell things with gold. My friends at Gold Money also do the same. I'm cheering for them because gold is the purest money I know. And all the ESG investors, gold has a much smaller greenhouse gas footprint than Bitcoin. Wonder if you knew that. Besides which, Bitcoin itself can be awkward to use as a currency for the average consumer. I know all you crypto geeks out there are probably chomping at the bit to disagree with me on this, but let me ask you, how many things in your daily life can you use Bitcoin for? Can you use it to buy groceries, pay for gas at the pump, order things on Amazon? Indirectly, perhaps the answer is yes, by buying things like gift cards with Bitcoin, using them instead. But then you're not really using Bitcoin itself as the currency, are you? Look, the chart you're looking at right now is the median time to process a Bitcoin transaction. The y-axis is actually in minutes. The x-axis is the last 6 months of the Bitcoin transaction times. After all, with the current median transaction times for Bitcoin sitting at around 15 minutes per transaction, there's no way you'd want to pay for anything directly with Bitcoin. Can you imagine sitting around the supermarket waiting for 15 minutes to confirm payment for your groceries? I know I'd have wiped out my credit card instead before the first minute was up. So rather, much like gold, Bitcoin serves better as a commodity, as a store of value. And as a matter of fact, Bitcoin has recently found itself being brought up for the same reason gold often is, as a hedge against inflation. Paul Tudor Jones, billionaire and famous hedge fund manager, reported earlier this May that he had bought Bitcoin as an inflation hedge in his $22 billion Tudor BVI fund. While central banks around the world were busy printing money to combat the coronavirus-fueled recession. A smart move in hindsight, this was back when Bitcoin was still trading $10,000. Bitcoin, like gold, can play a role in your investment portfolio. You should ignore both the alarmists putting all their eggs in the proverbial crypto basket because of their philosophical aversion to fiat currency, as well as the old school types who haven't changed their tune in the last 10 years about crypto being just a fad. It's real, it's here to stay, just like MMT and more government stimulus is here to stay, as is taxing those with assets, wealth, and cash. Different types of financial assets are complementary rather than substitutes and serve to add diversification to an investment portfolio. Besides Paul Tudor Jones, many other prominent hedge fund managers in the world, like Stanley Druckenmiller, have invested heavily in a combination of Bitcoin, gold, and stocks. Specializing doesn't mean limiting yourself to one asset class. Jeffrey Gundlach, the so-called bond king, owns physical gold. Warren Buffett invests heavily in U.S. treasuries and municipal bonds. George Soros didn't derive his whole $8.6 billion wealth on shorting the pound sterling. John Paulson made just as much money trading credit derivatives as he did betting on gold prices. That said, one thing that's become increasingly apparent in the last few months is how disconnected Bitcoin can become from the stock market and even gold itself. While November 2020 was one of the worst months for gold and the US dollar, Bitcoin instead took the chance to shoot for the moon. The performance of selected investments is this chart I put together showing how Bitcoin versus the S&P 500, NASDAQ, US dollar, and gold performed in the month of November. But if Bitcoin's recent performance has whetted your crypto appetite, be careful. Bitcoin technicals. What happened to the price of Bitcoin last month should make any investor wary. In the last week of November, rampant buying pushed the price to a near all-time high of $19,330 before the price fell $2,307 over the next 3 days. Yes, Bitcoin proved its mettle and went on to end the month at a new all-time high of $19,850. The chart you're looking at right now, you can see using the RSI, which is a relative strength index indicator. Bitcoin has been in the overbought territory far more than the oversold territory, but that's just one indicator. When the price of an asset successively reaches new all-time highs on several consecutive days, it shows you that it's not the best time to get into market prices. But Bitcoin is different. The Bitcoin weekly relative strength, as you're looking, is shown that as it's in the oversold territory as an RSI of 30, and now we're approaching all-time highs of the RSI. And if you can't stomach volatility, then cryptos might not be your cup of tea. The extreme price volatility shown by Bitcoin in the past, where it swiftly gained or lost over 30% of value in a single day, undermines its attractiveness as a stable store of value. But it's still early days for Bitcoin. On March 12th, earlier this year, Bitcoin lost over 38% of its value in a single day, over $3,000. Contrast this to the S&P 500, which took 1 month to decline 33% between February 19th and March 23rd this year. Or for a better comparison, let's compare Bitcoin volatility against gold. This chart you're seeing right now, the blue lines show the Bitcoin price volatility, and the gold lines is obviously the gold volatility. As you can see, the Bitcoin volatility is an order of magnitude higher than that of gold. Right now, Bitcoin is still well in overbought territory, and its volatility means that sudden large price swings are quite commonplace, both to the upside and downside. If you're suffering from Bitcoin FOMO, don't. If you want to build a position, then you should treat Bitcoin like any other stock or commodity and only start buying incrementally while the herd is selling. And it's like any other commodity, like gold. There's days where it has harsh sell-offs. Fortune favors the bold. Now, where does Bitcoin go from here? If gold is the barbarous relic, a piece of history from a bygone era, what does that make Bitcoin? It's important to distinguish Bitcoin from other cryptocurrencies. For instance, the performance of Ethereum, the second largest cryptocurrency after Bitcoin, has often been driven by the performance of Bitcoin itself. But this correlation has weakened at times over the past year as the explosive growth of DeFi, decentralized finance, financial services backed by blockchain technology, primarily built on Ethereum platform, became a new driver of interest in Ethereum. And like Ethereum, many other cryptocurrencies that exist in the marketplace have different use cases and different value propositions. Though I started earlier that Bitcoin is too awkward and unwieldy to use as a currency for day-to-day transactions, The same isn't necessarily true of other cryptocurrencies. I think there's a good chance that one day we'll be able to truly use cryptocurrencies the way we were intended, as the new digital cash of the future. But even if that day comes, Bitcoin will probably still serve the same role it does now as digital gold, as a asset prized for its scarcity rather than its utility as a currency. Think of it as the Bitcoin standard, like how gold was used in the gold standard. Again, I play in the sandbox I have an advantage in over others, and that's gold equities. Not a single newsletter or fund manager in the sector can come close to my returns over the past 12, 24, 36, or 60 months. That's why I focus solely on the resource sector, because I have an advantage over other fund managers or newsletter writers. But I do have a significant amount of money invested in the crypto space. You see, I don't manage it myself. I just don't have the time to do it. Instead, I have one of the most knowledgeable teams manage my exposure to crypto. But I do pay attention because I've put a lot of money into it. And a math theory has recently made its way around the world regarding Bitcoin that is being used by almost all Bitcoin bugs. I will probably get more hate email next week than combined in the history of my firm for what I'm going to publish. Again, I want to remind everybody, I am cheering for Bitcoin. I have a lot of money in the crypto space. I want it to go higher, and I think it will go a lot higher. However, as most of you know, my background is mathematics. So when someone floats around a fancy math concept, I take a look. While most guys would take a look at a sports car or a hot supermodel, I like looking at math theorems. Next week, I will publish in detail, step by step, putting back on my old calculus prof hat, why everyone using this formula is wrong. I know it's going to go viral. I know it's going to get hate. But to be a successful investor or speculator, you need to understand the facts. I am not shorting any cryptos, nor am I shorting any companies in the space. All I'm trying to do is bring a higher standard to the industry in the hope to better it forward. No different when about a decade ago, I urged a major mine to be the first smart mine in North America to get rid of relying on shovel operators and truck drivers communicating to one another on delivery of ore versus waste rock. The old hands at the mine thought that I was just a nerd, thinking that the computers and GPS systems had no place in a mine, but it improved production by 7% within the first 30 days. That's why I plan on here. I know there will be those who refuse to look at the math, and to those, there's nothing I can do. But if you care at all on educating yourself better on Bitcoin, and crypto's next week's piece is a must-see. And until then, I suggest you start looking at my favorite time of the year again, when stocks are sold for reasons other than their intrinsic valuations. That's right, it's tax loss season. And I've just handed my Katusa Resource Opportunities subscribers 4 new gold stock buying opportunities that are trading a discount to its intrinsic value, its NAV, and to keep an eye out for this Christmas. If you want to know the best stocks to buy this holiday season and why I'm personally taking large positions in them at the same prices as my subscribers, consider signing up to the link above. And to all the crypto crew, I look forward to next week. Until then, stay safe.